Hey, thanks so much for joining me on this week's market update. We got some really interesting news this week that is going to be very helpful for you. And there is some good news with this as far as it comes with the job market with rates and some other things like that that are going to be very helpful for you. I want to share with you some screens as we're getting along. But before we get too far, I'm going to get real quick into sharing with you what is the big deal right now with the market. So we're going to get into this. And we're going to talk about the job market and what to kind of expect as we're getting into the days that are coming up ahead. So you can see right here, here's the market. We're going to come back to this here in a second. I really want to focus our time, though, on some of the interesting information that is going to be coming out in the next couple of days. We got some really big reports coming out. The big one is going to be the ADP report. Now, I pulled this from the MBS Highway. We're sharing some of this morning. So this is not something that I came up with. I just want to give that clarity. But this does provide some interesting news right here. The ADP report, they were expecting, this is all about employment right now. And those are the numbers that are coming out Friday. So Friday, we're going to see some numbers coming out that are going to make some really big waves in the market. It could go a variety of ways, but the Fed is really focused in very hard on inflation instead of spending some time talking about employment. Now, with the employment, they were expecting 115,000 new jobs created in this last month. We only saw 37,000 created. That's a really big deal. In fact, we're starting to see by business sizes, we're starting to see that there's negative numbers coming into this with the small businesses, which means 50 or less employees are starting to lose more people than they're actually hiring. We're seeing a few additions coming into the medium size, and the large size are also moving as well. Now, here's an interesting piece is the sectors. If you look at the sectors, leisure and hospitality seem to be growing, whereas some of the other ones, professional services and health and education, those are tending to fall. Now, the interesting piece about this also is the wages. If you come down here to the bottom, you can see the wages, and you can see that those who stayed had a 4.5% chance of getting their income raised, which is a good thing. And those who switched did see a slight bigger boom when it came to those pieces right there when it comes to the race. So it's actually a pretty good and interesting piece because we're expecting the jobs report to come out on Friday. And this job report is going to come out a little weaker. Weaker means better rates in essence. But at the same point in time, it is going to be a challenge because those who are looking to buy may feel not as excited about what's happening right now with the rates themselves. There's another piece of data that's coming in that is extremely important to share, which is the mortgage applications. It's down over last month, but that doesn't mean a whole lot because last year we're 18% ahead of 2024 year to date. So that means that mortgages are still happening. People are still out being very much involved in what's happening in the market, and they're actually making a big thrust into the marketplace. For those of us who are living in Virginia, this is actually a very key piece right here, and I'm going to go ahead and share this with you. Market Watch came out with a fantastic article right here about the 10 most competitive housing markets in America. And this is extremely important. So number one is in Seattle, Washington. But look at this. Number two is Richmond, Virginia. This is a big deal right here. San Francisco, three, Tacoma, Washington, four, Alexandria, Virginia, five, Anchorage, Alaska. Whoever thought Anchorage would be that popular? Personally, I'm not a cold kind of weather guy, but hey, whatever works for them, that's fine with me. Sacramento, Arlington, top three out of 10. Three of them are in the Virginia area. Arvada, Colorado. I had no idea where Arvada was. What the heck? Anyway, Oakland, California. So you're seeing all sorts of things. Three of these big ones are actually right here in the Virginia market, and Richmond being the number one, or number one in Virginia as far as most competitive markets. Now, what they used for analysis on this was what they were saying is they were using it as far as based off of valuations over ask price. So it's still a very competitive market. I'm actually seeing that quite a bit, and I'm seeing people coming in above price ranges in all areas. Now, I'm also serving the Florida market. We're not seeing that as much, but we are still seeing that you have to be a shiny penny, whether you're a seller or a buyer, in order to be able to move forward. You're not getting incredible deals in both sides of these, especially in the Florida market, but you are seeing some significant pressure when it comes to the Virginia market. Now, this is a really big deal because the next thing that you need to know with mortgage applications is that we're 42% above where we were last year with refinances. Now, for me, that really suggests that we're seeing a lot of people, especially as you go into the job market piece, you're seeing a lot of people who are struggling were having to pull cash out to pay off or to do some other things along those lines in order to keep their family moving. So I'm seeing a lot of that, especially with the high interest rates. That's kind of a not necessarily fully a surprise, but it certainly is a surprise that we need to keep a close eye on, as that is going to impact going forward. So now we're going to go back into the market right here. This is where the market ended today, to the green, 31 basis points, which means that we bettered our position, 31 basis points. You can see right here that there was a line that we were having a hard time breaking through ever since the last Fed meeting, which is right here. We had a really hard time breaking through this line. You can see if we go into the moving day average, the 25-day average, you can see we were having a hard time breaking even the 25-day moving average. It looks like we finally broken through that. If we come out of it and we look at the 200-day moving average, we finally met it up to the 200-day moving average. We were seeing some weakness as it came across. Now, the big deal is we saw a lot of gains because we're anticipating the job market to come out and say that, in essence, we're having a problem with the job market, and we're hoping that the Fed will catch up with this because inflation is coming down. The last numbers on inflation were actually favorable, but the job market is starting to get a little bit, tighter. It's harder to get a job, and people are losing their jobs, like we saw in that last picture. And so we're expecting that this news that's going to come out Friday with the jobs report is going to play a big role in what's happening in the market and also interest rates. Now, also a key piece to this is going to be the rental data. We've actually seen in the rental data coming out of Redfin, which Redfin doesn't always get the data right. But in this case, Redfin has actually put out the rental data saying that rentals are actually getting weaker. And there's some supporting data coming from other places. So that's actually not necessarily a bad news piece, but that certainly could help with the inflation piece, as that really does make a difference when it comes to that. Now, here's the good news with this, okay? Rates are still somewhat high. Rates are still on the level to where they are a little bit high. That is a big deal because what that is doing is it's keeping people out of the market. If the rates start coming down as fast as we're anticipating that they could happen over the next few weeks, it's very likely, or possibly months. Fannie Mae came out saying that by the end of the year, we're going to be in the low sixes to high fives, and that by the end of next year, we're going to be in the mid to high fives. It's hard to say exactly what's going to happen, but what I really do know is that we're seeing a lot of people that are sitting it out because of where the interest rates are. The good news, the silver lining, is you can lock in a really good price on a home right now, and then you can better your position when everybody's scrambling and competing for the same exact house, and you're seeing the seller's market return. So here you are. So glad that you had a chance to come and join me. There's wonderful resources on my website. There's some webinars and all sorts of great information that you can pull from. Would love to have you come and be a part of the conversation. So go to my website, parksmortgagegroup.com. You can download first-time homebuyer investor resources, all sorts of great things to help you get started and join in the conversation on one of my workshops. Thank you so much for the opportunity, and I look forward to having this conversation with you again very soon.